Welcome back to another episode of Dumbest One in the Room, where I ask the dumb questions so you don't have to. Today we've got Darren Rogan here from Rogues Labs and Film.Fun, which is some pretty cool stuff he's building. Welcome to the show, Darren.
Thanks for having me.
Always a pleasure to have a chat with you, mate. We've had quite a few good conversations over the time, but this is probably going to be one of our deeper ones because we're hitting it pretty hard in this episode.
Awesome. Looking forward to it.
So basically, the last episode, we explained to you all about where money started and how the current system is broken and where crypto comes in. But now we're going to actually understand what crypto is and what it's all about. So basically, I suppose the first question, Darren, can you explain crypto to me like I'm a 5-year-old and I can understand it?
Yeah. Money, as like today, is an entry in a database, right? It is an entry in a bank that says, here is money that you own. Okay. Now, a blockchain is a shared database, logically, that anyone in the world has a copy of. And that is why it's decentralized versus centralized, which is only the database that's inside the Commonwealth Bank, for example, or NAB Bank, because we're using Australian references. So money is digital. It has been digital for a long time. And what cryptocurrency does is it uses cryptographic encryption to be able to decentralize control of that, removing the need for a bank in order to manage money. The network itself is the management tool, which allows us to just have a software wallet, just like an app, banking app with value in it in different currencies, and allows us to transact from one person to another. And more that banks currently don't do. But at a very basic level, it is a database which is shared with lots of people. And the reason it's immutable, which is the big thing, which means it cannot change, which is why we trust it, is that it has to propagate across the network so that enough people see your transaction and accept it. And then we have the concept of a miner or a validator. And what they do is process the transactions on the network. So if I go to do an FPOS transaction, FPOS is processed by the bank. If I go to do a cryptocurrency transaction, it is processed by that network and the validator stroke miners on that network who mine new blocks. But in doing so, they take all of the waiting transactions and they put them in the new block, and they get rewarded with a block fee by processing these transactions and putting it onto the blockchain. And then that allows the network to work successfully and there to be capability in the network because the miner gets paid for doing the block as well as some transaction fees on top of it, but they still get paid for being there, which is what we call the emissions, the block emissions. And that is basically you being paid by the network in order to be part of the network, which gives that capability for us to transact on top of it.
So obviously in later episodes, I'm going to go deeper into the differences between miners and validators and all that. But just for today, now you mentioned blockchain. So we hear that sort of changed with crypto, blockchain, this and that. What does blockchain actually mean?
So in traditional accounting, we have a thing called a ledger, right? Which is all transactions in and all transactions out. I bought this, I sold this, and that's a transaction. And that ledger is how we run any sort of business. Now, personal finances, you don't necessarily do this, but in businesses, you say who got money sent in and out. A blockchain is, as you would describe it, a chain of blocks, okay? And in each block, it's the block number, which is basically its time of when it runs, and the transactions within that time. So if you and I say the block number, and this is generically the same on all chains, okay, be it Bitcoin, Ethereum, or any of these sorts of ones, they're all different mechanisms for doing the same logical thing. There's another thing we won't go into called DAGs, directed acyclic graphs, but they're not that popular. Nearly everything that you use is a standard blockchain of here is a block of transactions, and I stamp it with an encryption saying this is processed, and then the next block opens up and someone else processes that block. And that connection of block of transactions after block after block after block is what we call the blockchain. And you could go from the first block, the Genesis block, the very first block, and you could reprocess all of those transactions and you would end up with the same value in everyone's wallet. Okay. So it's basically a completely replayable. Once it's in and it's stamped, it's done and it's immutable, and the funds are in the new person's account.
So
Okay.
just to try and
So when a block gets
just to try and translate that into maybe a way that new people can understand. So, for example, the way I'm understanding it is if I'm on my internet banking, I download the statement each month for my bank account. Each month statement is one
Mhm.
block. It's got the ins, it's got the outs. The final balance at the end of that month will be the starting balance at the end of the new month, and so on and so on. So, yeah.
Yeah, and the reason it's called a chain is your next month points to your previous month, right? So you don't read one month in isolation. You read the every month one after the other. So if
Yeah.
you imagine it said continuing from last month, that's the chain part of the blocks. So logically, your statement is a block, and your email from one to the other where it references the previous one is the chain. And that's how we know that all the transactions are done in sync.
Excellent.
And that is the sort of blockchain ledger, as we said. And everyone's transactions are in there, and everyone's account state is there. So we can determine who's got what value in their associated wallets.
Excellent. So I think we might go a little bit deeper on that in a minute. But
Mhm.
why do
But
we
the best way
need?
to think about just the best way to think about a blockchain is it's just in the cloud in many computers versus in the cloud in one person's computers. Okay. So
Yeah.
instead of it only being in the Commonwealth Bank, it's in lots and lots of servers. It's in my server, it's in AWS, so you have this resiliency which doesn't happen in a centralized bank. And we have the concept of stable dollars, which is basically standard money on chain, which means that you don't have to have volatility. But the best way I describe it is it's just a banking system in the clouds, and your wallet is like a safety deposit box that allows you to access it with your private key to take funds out or to send them somewhere else. And you have an address on your PO box, and people can send funds to you, for example. So you can say, here's my PO box, and think of it more like a post box in the sky with the system of delivery happening in the cloud.
Yeah, very good. So why do we actually need blockchain? What problem do we currently have that blockchain solves?
Well, the big problem is monopolistic behavior. We do have like different countries have got different problems. So it's not the same solution for everyone. But in Australia, we have a banking sector, which is the most profitable per equity in the world. And it is very focused on one sector of the society, which cause negative outcomes. So the biggest problem we have in Australia is really monopolistic behavior. We have international fees. So I used to get paid out of the US, and I would lose $200 to $400 on every payment with middlemen taking a fee, a fee, and a fee. And with crypto, that is cents now rather than like $300-400 transaction fees. So there's a speed of transaction, which is a major thing. There is a monopolistic behavior where without true competition, people are bad actors. As when they have a monopoly, they have monopolistic behavior. So like I believe Uber made the taxis better, if you comprehend what I mean. And I think crypto makes banks better. So I'm not here to say, let's get rid of banks, but I'm saying that banks without true competition will not necessarily be the best actor towards its user base. We can talk about money printing and the problem with fiat, which is a very different conversation about just the technology. But I don't know if people listening are aware, but since COVID, the last few years, we have printed 25% of the money supply in Australia, which means new money has come into existence. And every time a new loan is written, new money comes into existence. So we have a giant property bubble for the last 10 years, which has actually created a massive inflation of the money supply, which then trickles through into the real economy. So this bad government money inflation is a major problem, and it is basically the cause of most inflation that people cause, because that money supply keeps increasing, which means there are now more dollars in circulation for the same scarce assets, pushing the prices of everything up. but it's slow moving. So they get away with it because people don't realize this is the cause and they get to have like a scapegoat. But basically, they're printing money, and that's one of the big things. And then there's also about ability to transact. So I believe that you should be able to transact basically anything that you want for anything that you want. And if it is wrong, there should be consequences, not requesting permission, because that
Yeah.
becomes to a point where if the government no longer agrees with me, they can now shut down my finances. And it's not even that far fetched. If you remember what happened to the Canadian farmers, they were protesting and they had their bank accounts frozen. They had their
Yes.
business accounts frozen. So they were trying to use economic force to get them to stop protesting. And I think that that is not right. And I think that, there's too much power in the hands of the few. And this type of thing allows us to manage and to sort of, I wouldn't say break the control mechanisms, but I believe in an open, free society. And I think with these types of controls, that tells me that it's coming towards the end of an open, free society as the government tries to clamp down more and more about what we can do. And we turned into a controlled society, which, if you look at history, controlled societies have rarely prospered and normally have a degradation as the inefficiencies of government kick in. So now I feel like I went on a big rant there, Jason, but
No,
I
no,
try to
that's fine.
cover a lot.
We're all about control over our own finances here. That's the whole point of doing this.
One thing that is really useful for people, even like outside of Australia, is you can have a stable coin. So, like, we're talking about Ethereum and Bitcoin that have known inflation rates, meaning that they cannot change and they're going to increase by 3% or, 5% or whatever it is. We know that inflation supply and it cannot change that new issuance. So there is a market price, but how many new coins come into existence, which means the money inflation. Those types of assets exist, but then we also have just dollars on chain. So the stable coins, right? Tether is the big one, USDT, USDD. We've got Australian stable coins on the market now. Macropod, AUDM, AUDD, and there's a few more hitting as well. What that allows you to do is basically transact at a lower cost because there's not as many middlemen in the existing system because it was built up over time. And it allows you to hold foreign assets. So, for example, I could go hold, and I do hold, some USDT. And in doing so, I'm playing the FX market in all intents and purposes because I'm not holding an Australian dollar, I'm holding an American dollar, and I can convert that to an Australian dollar very quickly in on chain, and I can use something like Cast Card to then pay for that at a point of terminal. So I can transact into the normal system, but it allows me to sort of geographically with these different sort of stable coins, and there's still associated risks with them, but it does allow me to remove myself from risk. And Australia is relatively stable, but you think about another country that has had hyperinflation, rather than like going to Bitcoin or going to Ethereum or going to Solana, which are all great currencies, don't get me wrong, they could have just went into a euro coin or into an American stable coin and sat out, that local risk rather than their money being inflated away.
Yeah. So these stable coins, do they we still have the same control we do when we have Bitcoin, Ethereum, and all that? Or does the government still retain a lot more control over them?
So really, no, because you have what's called a bearer asset, which means the holder of the asset owns the asset. So a piece of gold is a bearer asset. A Bitcoin is a bearer asset, and Ethereum and Solana are bearer assets, meaning the whoever has possession, if it's in my wallet, I own it. Now, when we get to what we call paper assets, you have a claim on it. Now, funny thing is, money is actually a claim on money, which is weird. So most of
Yeah.
the pieces of paper are technically a claim rather than a bearer asset. So it's not the value in itself. It's a promissory note. So it's weird because it's actually a promissory note that you're trading rather than it being a piece of value itself. And when you go to an on-chain, you have an issuer of that. So it turns almost into private money, and that private money issues you a dollar, which can be redeemed for a dollar, normally via their protocol, or it then can be traded, for example. So you can go onto Macropod or AUDD's website and you can put in $100 or $10,000 or whatever, and you will get $10,000 worth of their stable coin, which then allows you to transact across the network. Now, there are things called capital gains taxes in Australia, which means that if you hold an asset and it increases or decreases in value, you have to pay the difference. And if you're primarily using USDT as an American stablecoin, you do have a lot of capital gains calculations. So being able to use a domestic stablecoin can make your tax reporting significantly easier, because if it's just a stablecoin, you're not worrying about the fluctuations of one currency against another, which actually increases your complexity when you're doing your taxation, which is a bit of a pain. So they would be like the stable coins, but there's still a company behind them. Now, how do they work, or why do they work? You got a couple of different types. You got the programmatic one, which are backed by an asset, for example, like which are on chain, and they'll take like an asset, like an Ethereum or a Bitcoin, and they'll issue you a new stable coin, which has got a nominal value. And then if you fall below that value, which is DeFi loans, they will liquidate that funds to make sure that coin is backed. But what normally is the case, and when you look at the Stables Act in the US, it's backed by government debt. So the most of the big ones, and even Tether is I think it's like the 13th holder. I can't remember off the top of my head, but you fact check this. Tether is a massive holder of government debt. So what they do is they take the money that you've given them and they buy a government bond, which is deemed the highest rated asset. And then they hold that asset and they get the yield of that loan as their primary income source. And then the stable coin is almost like the secondary benefit. So they invest that dollar and their profits run off it, and then you use that dollar on chain, and then you can offboard. So Circle's another big one as well. So they're the two big stablecoin providers. That's the US law. Other ones may work differently. I don't know if that's a good thing, to be clear. I like some of the programmatic ideas of what they're trying to do, because it's stable, but it's stable against an unstable asset. Because a given stable coin is just the same risk as a dollar. Well, not a little bit more risk because you've got an issuer. But there was the concept of a bancor, which was after World War II, where they're talking about creating a basket. And this is what Meta tried to do to create its stablecoin that got rejected. They tried to create a basket, and then you say, well, here's US dollars, here's Chinese yuan, here's Japanese yuan, here's Australian dollars, here's euros. And then all of that would create like an asset that doesn't fluctuate as much as the individual countries. And I think that global stable coin, which is a level above an individual currency, would be the best stable coin to use, because because if one country has a financial crisis, say they don't have enough diesel for some reason, and then they have a massive inflation spike, they will have a problem with their local currency, which would then impact that price. But if you're operating inside the country, it's not an issue. But when you're operating, globally, you can then be impacted by the behavior of one of those countries.
Yep. Oh, beautiful. So back to the blockchain part of this. What's stopping someone getting in and just fudging some figures and changing transactions to give themselves 1,000 instead of $10 or something like that?
So the way that it works, it's a very hard math problem that is the stamp of the transaction. So the operator on the network, which is not the person doing the primary transaction, it's the Bitcoin miner, the Solana validator, for example, they have a pool of transactions people want to do. And that transaction gets in for approval, gets checks to make sure the balances and stuff exist. And it goes from party A to party B. And then once it's done, it is then stamped by the first validator, the first person, with this cryptographic stamp, basically. So the entire block is encrypted, and here's your encrypted block, your crypto block. And that is then propagated through the network, which is then what we call a consensus. And when everyone goes, yeah, I got that block, and that's the newest block on the chain, which is the top block, then your transaction has been submitted and approved, and then the network recognizes it, and then that transaction is there. Because it is decentralized and the network has agreed that this new block is the biggest block, I can't go into a single database table and change it. One, because it's encrypted information, because the block's been stamped now, so I can't modify it because it changes the block and then it's an invalid data set. And two, that data is now replicated across thousands of servers. So I cannot go and change thousands and thousands of those. Okay. So that creates this resilient network where even if I say I did it to the one operator in front of me and then they blew up, right? Just imagine they just blew up. As long as that went onto the network, that transaction will get propagated everywhere and it would still happen. And if it did, if it blew up beforehand, then that transaction didn't happen and it would all roll back and still be in my account. It would never go forward. So it's a all or nothing approach of submission and then confirmation, which is when it's been confirmed as it's propagated through the network. And that innovation, like that really is an innovation that removes a lot of complexity, but it is heavily dependent on the cryptographic security. So we do have a bit of a quantum issue that's going to come up, but there are quantum resistant algorithms. And so they just need to decide on how do they migrate from the current algorithms to these quantum safe algorithms in a timely fashion.
So we can basically upgrade the security per se as the times change.
Absolutely, you can. And there's been upgrades through most of the chains. Very few chains do not take upgrades. There's upgrades nearly every couple of months with something. Some of them are major upgrades, like Ethereum went from proof of work to proof of stake, which is a huge one. It changed
Very
its
big.
economic issuance with the burn. So this type of thing will change when they feel the need to. Now, there's interesting conversations to be had about Bitcoin because of all the dead coins and what happens in the migration, because they cannot be actively migrated and the private keys might be able to get leaked. So what do we do with the 1/3 of coins which are basically exposed? I don't know. That will be determined over time, but there are pathways for everything to be fixed. It's just whether or not it's done quickly enough.
So crypto is, do we consider it revolutionary, or is it just a bit of hype? Like, for example, if we were to go, "Yeah, crypto succeeded, what does the world look like? How does that look?"
There's two parts here. There's one, the technology, and two, the potential change to the economics. So what you will be told by the incumbents is that it's a good technology. We're the adults. We're going to take your toys off you and we're going to improve our business with your shiny toys, but you're not allowed to be part of this, right? And this is sometimes is what we call regulatory capture. And when we went back to stable coins, like the ideal stablecoin is like a programmatic stablecoin, right? With something that can self-balance, self-heal, holy grail stuff. That is now no longer legal to even attempt to do one of those things in the US, but you have to buy a government-backed debt. And now they're issuing a bank coin, allowing banks to issue their own stable coins based on their balance sheets, which I think is a terrible idea. So this is what we call regulatory capture, where the technology is being sort of subsumed into these larger enterprises that we were hoping to fully disrupt. And they're taking some of the best bits of it into their business as a reaction. And I think it's still better for the consumer that they move that way. And that's what I mean about taxis become better with Uber. But at the same time, I do think that there is a society where the bankers are not as important as they currently are, right? I think banking should be a low-level substrate optionality code offering and money Legos, as you've heard me say in the past, not this, major industry that it is, because it is like a usury industry and it's not a value creation industry in the same way. As I think that it has not had the impacts that we want it to have, because those large centralized banking people are sort of like taking the best ideas and trying to push us further and further away. But in saying that, some of us were just idealistic as well. And the reality of adoption is that things change over time. So I'm not like anti the banks doing it. I'm not anti it doing it, but it is sort of like some of these centralized players putting on our costumes and taking our best technologies and then improving their systems. But those improvements are not necessarily going back to you. So in the stablecoin legislation in the US, for example, they try to make it illegal for stablecoins to give you back a yield. So as I mentioned before, stablecoins buy a bond and they get a yield for the government for giving them that debt for 2, 3, 5 years or whatever it is. And they can sell that bond in the market and get their money back basically. But some companies would say like, I'm getting 4%, I'll give you 1% back. So you'll get 1% back of the money that you send with me. And the banks were trying to get that legislation to make sure that the stablecoin companies could not do that. Because why would you put your money in a bank and get nothing when you could put it in one of these? So they said that it's systemically risky for us for these things to exist. So in that instance, we are being suppressed of the best options because it's about protecting the current system and the conversation about stability and all this type of stuff. It's not about you, the individual. It's about the current system that exists because they don't want to tear anything down. They don't want to change anything. So the cryptocurrency cyberpunk, we wanted to enact change, if that makes sense. And I
Yeah.
think that we are failing in that to a certain degree. And in the last cycle in particular, when it went very meme heavy and very hyper speculative, that was really not the ethos that some of the earlier people were involved in. It's much more look at the shiny slot machine, no crying in the casino, pull your hand down. Now, I still like going to the casino, don't get me wrong, but I just mean about like where crypto was, where it was trying to go. But for me, I think that we need like a Wild West, a frontier for experimentations. And I understand as it comes closer, it may need to become more sanitized. But I don't necessarily think that the incumbents who basically work in lawfare and policy and enforcement, that sort of stuff, necessarily are going to do the innovation that drives the types of changes that we're interested in. But
Yeah.
AI is coming, and I think AI changes everything. And crypto is AI money, if you ask me.
Yeah. No, I agree on the meme coin part. Where I think as an industry, we lost a little bit of credibility when it became a giant casino for that period of time. But we're all working towards rebuilding that credibility. So what with crypto?
There were still awesome things occurring.
Yeah.
Yeah, just on the main thing, there were still awesome things occurring. But Vegas had all the attention, right?
Yes.
It had the lights, it had the flashiness, it had the money that was flowing through it, and new people were brought in by the belief of easy money. But that has been a draw card in crypto the entire time. A lot of people have come in the bull market for what is perceived to be easy money, and then they lose money or they make some money and they learn about the technology and they learn about you know, about how the banking system works, and they learn about the realities of the system that they're in, and then the secondary option. So I hope a bunch of mean people will get to there, but some will just wash out as always.
Yeah. So obviously a lot of misconceptions about crypto still. I've heard many about, the biggest one is I can't afford a Bitcoin because it's too expensive. People don't know that you can buy a small part of a Bitcoin, etc. But what do you think is probably some of the biggest misconceptions or wrong beliefs in crypto that people still have?
Some of them are like quite old, if you know what I mean, about it being like used for crime. Crypto is crime. And I'd say that, like, don't get me wrong, there was crime at the start. You had the Silk Road, you had, permissionless money, so you had people doing bad things. And there are parts of the industry where I think money laundering, still is a factor on certain chains. But the legislation, Austrac connected in everything here into the bank accounts, into the exchanges. None of that is really occurring anymore in the same sort of fashion as it used to, at least in these sectors. But I think that it's a naive argument because it assumes that that stuff doesn't happen in the traditional systems, if you understand what I mean. So I think it's an unfair comparison that people apply on this. It's a bit like self-driving cars, you know what I mean?
Mhm.
They're like, oh, you can't have a self-driving car, it's going to have an accident. And you're like, but it has a lot less accidents than the people. And we allow the people to drive, but we're not allowing the self-driving car to drive, even though it's significantly safer on all regards. It's this incomplete comparison of apples and oranges. So I think that that's a big piece of it. And I think the lack of comprehension of the financial system, it causes people to misunderstand what cryptocurrency can do. Things like uh, being able to use a stable coin means I'm not using a credit card processor, which means I'm not losing 4% of the transaction fee. And I'm not having stolen credit cards in the same way, which means I'm not getting chargebacks, which means I'm not losing money in chargebacks through credit cards because the security around a wallet is significantly better than that around a credit card, for example. And those types of small things on businesses costs, people don't understand because they've only been on like one side of the divide. And then it collapses banks. Like you look at most of the banks at the moment, they're closing banks, they're closing branches, they're removing ATMs, and they're forcing you onto their mobile phone apps. And when you go to speak to anyone, it's a robot, it's a form you have to fill out, and it's something that's calculated, and there's almost like no people. And if I go into a branch, I'm pushed to a machine and told to use the machine. And at that point, I think, why am I paying a premium for your services? Like, what are you giving me that this cryptocurrency doesn't give me? And I joke that the only thing they've done is teach us that paying gas prices, which is the cost to do a transaction, is no longer a bad thing because they're charging us transactions on everything. So like they want to push us into a cashless society where everything is pay as you go, tap, 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 and they want to take fees at every single layer. And I don't like the where we're going in a financial system of a controlled Chinese system at the end of the day, this social credit managed system. And I think cryptocurrency could aid us, but the controls in some of those stable coins are just as bad as the ones in China. As in, I can freeze your money, I can take it out of your wallet. And if you look at the Arcadia and some of the stuff that they've done with the RBA projects, they have looked at these types of things, which is a little dystopian to me. As more of a libertarian that thinks it's your money, you should do with it as you please, and deal with the consequences of bad actors. As in, if you do something wrong, you should go to prison, if you understand what I mean. But we shouldn't be putting control systems in everywhere to try to force people in. We should fix the system so the people do the right thing because that's how the system works the best, instead of trying to, squeeze everything in the right directions. So I'm nervous. I'm quite nervous.
My personal goal is to end up totally bankless and live on the crypto platforms. Do you see that as being a potential future for people?
I think it does. It's more to do with the fiat on and off ramps and what they allow us to do. Because like I have been debanked once, and I got threatened to be debanked by the Commonwealth Bank and brought into the manager's office and treated like a child, made to sit for hours. And I find it like extremely insulting to be like, you supply me a service, and if I want to spend my money buying cryptocurrency, it has nothing to do with you. Like this was not an act of trading. This is my personal account. And they told me if I did spend more than this amount of money, they would close all my accounts. And I find that to be like, I'm an adult. Do you know what I mean? Like I want to be treated like an adult, and I do not want to be in a nanny state where I'm told you've had too much beer. You've eaten too much McDonald's, no more McDonald's for you. And I worry that that's, where we're going.
Yeah. Well, I do know that after having many beers and 3 a.m. pancakes with you, there are times when we probably need a little bit of leadership to control us. But I agree. I want to debank myself.
I regret nothing. I regret nothing.
Was a great night. But yeah, so in closing, for all the people that are listening, if they could take one point, one thing from this conversation we've had, what would that be?
It's easier than it sounds. It's significantly easier than it ever has been. And, just touch your toes in it. So it's a little bit like AI, that it's scary and big until you start playing with it. And then it becomes easier and easier over time. Just installing one of the wallets that allows you to, transact is probably a big step for a lot of people.
Yeah.
Get your boat in the water, right? Instead of just staying in an exchange, you've heard me say this before, most exchanges are just boat markets that just sell boats, but those boats never hit the sea. Get on chain, because there's a whole product set. There's a whole, ecosystem of products that require you to have some sort of wallet. Although that's changing in my product. You can use with Film.Fund, you can use Solana Pay, which is a payment service. But I also use Privy, which is like a hosted wallet, just like Facebook, log in with Facebook, Instagram, all of those. And then that wallet's managed for you. And that stuff just didn't exist before. So it takes away a lot of the risk of management, but it adds a new risk because now a company holds the wallet for you. But it's a bit like Stripe. They like Stripe bought them, just so you know. So they manage people's wallets in like a company level. So you can sign up to my service and then have a crypto. So if say you were earning money or doing some other stuff, I can drop it in. So I think the technology is moving along, I think that agents in particular doing like very fast transactions is probably where it's going to go. I think that we're in a bear at the moment in April, 2026, and we have normal market cycles of interest, and that is like the most capitalistic show of interest and focus is that price. So if you zoom out and either use the crypto itself, store it for like long term, risk mitigation, or look at like long term swing trading, they're all very valid things. But I would just say, dip your toe in, don't go too deep, too fast, and lose a little bit of money, do something a little bit silly, have a bit of good hygiene. You don't lose all your money on your first bet, sort of thing. And you'll learn as you go.
One of my things I'm sure I'm going to say many times throughout the shows, I always tell people it's like internet banking 20 years ago. That was scary. I remember doing it for the first time. Now you do it daily without even thinking about it. That's where crypto is now.
Yeah, I remember people saying no one will buy anything on the internet,
Yep,
and everyone buys everything on the internet these
that's
days. So I just
100%.
think it's the next progression.
I do
It's like
agree,
even
mate.
Stripe, invested in a new chain called Tempo around payments. The efficiency of blockchain means that the financial sectors are going to come this way anyway. So sooner or later, you'll use blockchain, even if you don't know you are.
Yeah. The big struggle will be for us to retain the control, and that's where we're going.
For us to get control and upside,
That's right.
the barrier of entry being so low means that we can do these ecosystem stuff and build these comparable systems with multiple parties, which means we don't have to use the banks. And then we have to fight the regulators to make sure that we don't become illegal for no apparent reason.
Thank you so much for your time today, Darren. It's been always, as with you, it's been a great conversation, and we shall talk again soon. Thank you very much.
Thank you for having me.
Bye, everyone.